Finding funding for your graduate school can be one of the hardest things that a graduate student has to do. And for most of us, or many of us, that ultimately might mean that we might have to take out some student loans. So today we're discussing 5 things you need to know about federal student loans and how you as a graduate student can be more prepared to make an informed decision on if graduate federal loans are for you. Also, before we start, I think it's super important to say that I am not a financial advisor. I am not a financial expert. In fact, I'm just a graduate student that happened to have taken out a lot of student loans. So please, before making any rash decisions, consult with somebody who is considered an expert and knows your personal circumstances first. But now let's get into the video. Now, the first thing that you need to know about graduate federal student loans is that federal loans are completely different than private loans. And the reason that is because when you take out a federal loan as a graduate student or an undergrad, the U.S. Department of Education is actually your lender. And what this means is all of your loans, your disbursements, all of the logistical parts of your federal loan process is going to go through the U.S. government. And so that impacts people's eligibility and also just the steps that it takes to be able to take out these loans. There are also a larger amount of payment plans and opportunities and programs to help manage your student loans because, again, it is a federal program to help students get through school, where private loans are a little bit more cutthroat and have much less opportunities and programs and resources to pay back the money. Also, a big difference between federal loans and private loans are the interest rates. Now, I won't go into the nitty-gritty details of interest rates because they change year to year. And so what I might say in this video may not be relevant next year or 5 years from now. But generally, you can expect a federal loan to have much lower rates and much better payment plans than what you would see in a private lender. The next thing you want to be aware of is your federal loan options. In undergrad, you were probably offered or seen others be offered something called a direct subsidized federal loan. Direct subsidized federal loans are specifically for undergrads, and even more so, they are specifically for need-based or people who are considered lower socioeconomic status. In grad school, you only really have 2 real options, and that is the direct unsubsidized loan or the direct plus loan. Now, I will get into the details of a direct plus loan a little bit more, but generally, I do want to make sure that we understand the difference between an unsubsidized and a subsidized loan. A subsidized loan, again, is for need-based students that are undergraduates. And so as a result, they have an added layer of support or an added layer of governmental support or subsidization. That's why it's called subsidized. So while you are in your undergrad or while you are in school, your subsidized loan's interest is being paid by the U.S. government. They are covering that for you. So while you are in school, that loan in particular will not accrue interest. This is different in graduate school. Unfortunately, because we only have the options of unsubsidized and direct plus loans, our school loans do accrue interest while we are in grad school. Now, we have options to pay them while we are in classes, or to at the very least to pay off our interest while we are in classes, but generally that is the biggest difference, is that while we are taking classes as graduate students, and for the entirety of our graduate program, until we start to pay it off, our loans will accrue interest. And this is also true for the direct plus loan, but again, more on the direct plus loan a little bit later. Something else to know is when you are applying for loans or federal loans as a graduate student, you are applying as an independent. So what this means is as you are filling out your FAFSA and as you're filling out all of your grad information, you do not have to account for the income or the taxes of your parents. Now, if they are claiming you as a dependent, there are some other things to consider, but generally for the grad process and the FAFSA process, as a graduate student, you are an independent. Now, that means when you take out your loans, all of your loans will be under your name. So in the past, if you've had the privilege or the opportunity to have your parents or your guardians take out loans on your behalf, that doesn't really work in the same way as a graduate student. If you have federal loans or if you need federal loans and you are a graduate student, they are often under your name. Now, there is good news, or fairly good news, is that if you are somebody that doesn't have a lot of credit or may not have the best credit, for unsubsidized loans, they do not require a credit check or good credit score per se. So what this means is when you're applying for your unsubsidized loan, you don't have to have a long credit history to be eligible for those types of loans. This is different for the Direct Plus loan. Now, Direct Plus loan does require a credit check, and oftentimes that can impact your credit score. Now, if you're going to apply for a Direct Plus loan and you realize that you actually might not have that great of credit, or you may not have a long enough history of credit, don't panic. There are definitely ways to work with the US Department of Education to work around that, especially if you need to pay for graduate school. They would prefer somebody to have good credit, but I think because it is the federal government, they are more willing or able to find some flexibility about what types of grants or interest rates or workarounds they can provide you as a student. But the biggest difference is an unsubsidized loan will not require a credit score check, and a Direct Plus loan will. Also, something else that is super important is understanding that there are limits to how much money you can borrow, and this differs between each loan. So for unsubsidized, the most that you can borrow is about $20,500. And this is determined by your school. So while you will not be able to borrow more than $20,500, you might actually be able to borrow less if your school deems you as less need. So it's important to be aware that even though the government has a maximum, your university also impacts the amount of money or the amount of loan availability that you are eligible for. For a Direct Plus loan, the amount of money that you are able to borrow is equal to the total cost of your program minus any financial aid that you have received. So if you go into grad school, like I did, and receive no funding, then the amount of your Grad Plus loan would be whatever it costs to go to your school as a full-time student. Now, if you're somebody who was lucky enough to get some grants or some financial support, then it would take that cost of your total tuition and student costs and then subtract whatever your grants, funding, fellowship, what have you, from that higher amount. And that would be the amount that you can borrow. Though, I will say, just because you are offered the maximum amount of money that you can borrow, it does not mean that you need to take out the maximum amount of money that you borrowed. So you still get to decide how much money you borrow. It's just what is being offered to you will change based off, again, your school or your university's granting or like allowment or eligibility statuses, and then how much grant or fellowships or money that you've received outside of the US federal government. Also, if you find yourself borrowing or asking or receiving student loan amounts, and then at some point you win a grant or you get a job and you don't actually need that money anymore, there's usually a process through your federal aid or through your financial aid office at your university to decrease the amount that you've requested, and you can do that retroactively. If you do not go through this process, you would be expected to pay the total amount of loans that have been dispersed to you in addition to whatever interest that has accrued. So if you find yourself stumbling across some external funding or even internal funding that doesn't require you to pay it back, it is so important to try to lower your amount that has been dispersed or that will be dispersed before it actually gets dispersed so you don't have to pay interest on it. But of course, like I said, I am not a financial expert or a financial advisor, but I do have a video with one. So if you're interested in hearing what an actual financial expert in higher education has to say about grad students and federal loans, I would check out this past video. And if you found at least 2 things useful, definitely hit the thumbs up so others know that this video has good quality content. And as always, if you have questions, concerns, or just want to say hi, leave them in the comments down below. Your support, your shares, your likes helps a small YouTuber like me continue to grow. So thank you so much for watching, and I will see you next week.